So Bitcoin is digital gold on a big tech monetary network. Why would you want it? You would want it for the same reason that you want to run electric power to your city, or you would want to run running water to your building, because civilization is based on clean energy, clean water, clean communications, clean money. When you could generate 5 to 6% short-term interest on treasuries, and you thought that the cost of capital was 7%, then you didn't have to consider anything other than a conventional treasury strategy. You're maybe taking a minus 2% yield per year. I think that when conventional treasury assets started yielding 2% and you had a cost of capital of 7%, which is the expansion of the money supply, it became a minus 5%. People, they grit their teeth and they got through it. That was for the past 4, 5, 6 years. Now in 2020, we've seen the cost of capital explode. It's 25% monetary supply expansion. The treasury strategies are now 0, 1, less than 1%. So you've got a negative real yield, minus 25%. That's the cost of capital. Okay, that's actually turning up the heat that's causing everyone to realize that conventional treasury strategies are broken. Now, what are you going to do? Look at the last 12 months, ROI. Bitcoin is up 461%. S&P is up 25%. If you invested all of your treasury assets in the SPDR, in the S&P index, you kept up with the cost of capital. NASDAQ's up 53%. Big tech, they're monopolies, they're extraordinary, they're staying ahead of the cost of capital. Treasuries down 7.7%. If you were holding long bonds like TLT, that's a disaster. Gold up 9%. It's also a disaster. It's not keeping up with the cost of capital. So why Bitcoin? Well, you can't hold conventional treasuries. You're looking at a negative real yield against the cost of capital of 15 to 25% a year, right? I mean, I'm not a consumer. I have to control, I have to manage shareholder value. And if you want to maintain or grow shareholder value, you're going to have to grow your assets at a rate faster than the cost of capital. So your hurdle rate is 15%. Now, what are you going to do? If you talk to any institutional investor in the past decade and you said, my idea is I'm going to invest your money at 1% or 2% or 3% interest, they would ask for it back. In fact, there's not a single institutional investor that can keep limited partner capital by promising 1 or 2 or 3% returns. So all investors know the cost of capital, it's about 7 or 8. Look, if you look at the compound annual growth rate of the S&P over a decade, it's 11.4% for the past decade. If you look at NASDAQ, it's faster, it's 17%. Big tech is better than the S&P. If you look at the compound annual growth rate of Bitcoin for the decade, it's 198%. Okay, so why Bitcoin? I have to move my money. Look, either got 2 choices: decapitalize the company or invest the money into something which is going to keep up with the cost of capital or exceed the cost of capital. So let's talk about giving the money back. Well, Joe, the road to serfdom would be for you to surrender all your assets and take a job working exponentially harder for cash, growing exponentially weaker. No family on earth would do that. No investor is going to give all their capital back to the limited partners, right? No endowment's going to work. No university, no company can function by surrendering all their capital and then working harder exponentially for a currency growing weaker. And one more point, the robots are taking over the country. We're automating everything. So for Amazon to succeed, 15,000 retailers are destroyed. For Google to succeed, 15,000 media companies are destroyed. For Apple to succeed, 15,000 device manufacturers are destroyed. So every company is competing against Google, Apple, Amazon, Facebook. These companies are dematerializing their products, and Microsoft can bundle a product, ship it to 80 million companies over the weekend. First of all, it's the hardest money on earth. It's an institutional grade safe haven asset. It's gold without all the imperfections of gold on a digital monetary network that moves at the speed of light that you can program to do 1 million transactions a second. So Bitcoin is digital gold on a big tech monetary network. Why would you want it? You would want it for the same reason that you want to run electric power to your city, or you would want to run running water to your building, because civilization is based on clean energy, clean water, clean communications, clean money, right? It is an extraordinarily important thing. Now, with regard to companies, I think the real issue here is if every currency is correlated to the dollar, right? I mean, they're all trading against the dollar. So if the dollar is weakening, every other currency is weakening, and then every stock and bond and commercial piece of real estate that generates fiat or US dollar cash flows or any cash flows in a fiat currency, they're all correlated assets, and they're all correlated ultimately to the dollar. So if we create 15% more dollars every year for the next 10 years, right, then you've got to discount the cash flows of every other instrument by 15% a year. And it doesn't take a rocket scientist to figure out that 80 to 90% of the value in those instruments is going to be collapsing if the dollar collapses. So if you want to preserve shareholder value, you have to buy scarce assets. So Bitcoin is the most liquid, scarce, uncorrelated asset that you can buy if you're trying to do this in a treasury. What you're going to find is increasingly there's haves and have-nots, right? There's the elite that have incredible power, like the Googles and the Amazons and the Apples, and they have more money and more power and more distribution than God. And then you've got conventional businesses that have conventional cash flows, and they're being increasingly marginalized. So to ask those businesses to invest all their capital in a currency which is devaluing at 15% or 20% a year is pretty much committing economic suicide. And if you have a company which is cash rich and asset poor, your business is just getting exponentially harder, and any cash that you have is being degraded at the same 25%. The S&P is up 24.61%, which means that if you want a proxy for cost of capital, if you invested in any kind of company that was up 5% over the past 12 months, you're not keeping up with even the index. Right? So if you're an active investor, you're going to have to find a way to get above 24%. Companies have to become asset rich if they're going to prosper and maintain shareholder value. So Bitcoin is the highest quality property that they can buy. As the regulatory environment is already pretty clear on this. I mean, AML, KYC regulations have been applied across all of these exchanges. I think that there's a little bit more parity and precision that will be delivered in the coming 1 to 2 years. I think that's going to be the green light for institutions to invest 10x to 100x more into Bitcoin. So I think it'll be good for the industry in general. My view is Bitcoin is the underlying base layer of an emerging digital monetary network. If I told you that one day there'd be $100 trillion market for timberland, you might want to buy timber. And if you knew there's a $100 trillion market for any other asset, oil or diamonds or name it, you'd want to buy a bunch of it. So we believe there's a $100 trillion total addressable market for a digital monetary network. It makes sense to buy as much of that asset class as we can.